Start? Okay. Hi guys, thank you so much for showing up. This is, I think, the most people I've had for a finance basics class, like, ever. So I guess I did a good job of marketing this one. So this isn't going to be your regular finance basics class. We are going to be talking about just the basics about loans, but really when it comes down to financing and how it relates to your job in real estate, what I really want you guys to know is just enough to sell more houses, right? Like, our job as your partner is, one, to make sure that the loan closes, and also to make sure that we make you look good. Now, before we get into all of that though, I do just want to introduce myself to those of you who I have yet to meet in person. My name is Lizy Hoeffer. I am the #1 loan officer in Maricopa County and the #1 female loan officer in the country. So I promise you, what that tells you, I'm very proud of it, but I hope it tells you that, one, I know how to close a loan, and two, I know how to build a business. Okay? So with that being said, I brought some information from our company to you. Most of it's applicable to any loan company though. Okay? So what you need to know in loans. Okay? So if you go to this loan worksheet here, we're just going to talk about the very basics, right? So what I think you need to know in loans are minimum down payments, minimum credit scores, and what types of loan limits are available to you. So this form looks like this, okay? So it's like purple, and it has...
Looking for help with your down
this
payment.
one right here. So down payment assistance, right? So this is where we're going to start, because this is like your lowest criteria, so your 0% down programs, right? So things that you need to know, okay? You can buy a home with minimal down, okay? There's lots of advertisements out there saying $0, 0%, all of this stuff. Those are like everything else, just advertisements. I have yet to see anybody in the thousands of home loans I've ever done not spend $0 on their home. Okay, there's a home buying inspection, right? There's earnest money. I mean, there's other costs. So whether it's $500 for the home inspection, money for their appraisal, I mean, it is rare to pay $0 for your home purchase. So I just want you to know that there is low down or even 0% per se. But essentially, there still is down payment requirements. It's just covered by maybe a bond program, or if they are able to utilize like USDA or VA financing, depending on their qualifications. So, are there minimal down loan programs? Yes. But essentially, most clients will have to bring in $2,000 period to the table. Okay? So, how much do they need for their home purchase?
$2,000 minimum.
Okay, that's what you guys should be preparing for. Yes, they might get some of that back, but typically it's $1,000 for earnest and $1,000 for an appraisal and a home inspection together. Okay, does that make sense? Cool. Now, if you are not a qualified veteran or somebody who's buying in a USDA area, right, the only other minimum down programs that are going to be available for you to bring in less than the minimum required are these programs here. There are some specific grants that every municipality has, right? But it's too hard for you and or for me to know what all of those are at a given time, whether or not those have funds, right? And they're very specific when it comes to who qualifies, and typically it's people who make 80% of the area median income, which is like less than $38,000, okay? So do you need to know that? Here's what you need to know. There are additional grants available. These are the ones that most people will qualify for, okay? So you have your Home Plus, and you have your Home in 5.
Is that specific to down here in the valley, because we're from Yavapai County?
Mm-hmm. There's same programs up there too,
all
right? So these are programs that will qualify in all of your counties. Now, what changes are the interest rates and the amount, but you just need to know that there are bond programs and what there are. The key differences are going to be the income limits, right? And how much percentage you get in terms of assistance, okay? You can get up to 5% assistance, right? And you can take 0% assistance and just take advantage of the fact that it has lower mortgage insurance, okay? And if you are somebody with not as great credit, sometimes the bond program is actually the cheapest, like bond program with the 0 funds is actually the cheapest interest rate you'll get. So it's just good to know that you can get up to 5%, you can use FHA or conventional financing, and you have 2 big bond programs that are available in Maricopa and Yavapai County, okay? And Pima County, I mean all the counties here, okay?
That was Home Plus and Home and 5?
Home and 5, yes. So there are a couple of other ones. Here, I don't normally promote them, like Pathway to Purchase, guys, if you just want to star that one to the end. I don't even sell that program. It's a lottery on whether or not your people will get it. It's awful. I had one situation, you actually had one situation, not with me, I happen to know about it, where they just didn't get the funds. It's awful. Don't sell it. Okay. But it is available. I just want you to know which ones are available for our county.
Credit scores? Lower.
So minimum credit score is a 640.
How long are the Home and 5 and Home Plus? Do you know? They've been saying it's going to go away forever.
So they will be going away. So they don't have like limited funds. The deal though with the bond program is that they do charge additional fees. So they are more expensive in fees. And they've now put a 3-year repayment. So essentially what happens is you can't sell or refinance the home for 3 years, or you have to pay back the assistance. So they are trying to replenish the funds. So it's like tapering down. So there is no end date in sight. Pathway to Purchase, you have to find out every month how much funds they release. That one does have an end date. Since I'm not selling it, I'm not super familiar with what that is, but you could look it up if you wanted to gamble on that.
Are these only first-time homebuyers?
So a first-time home buyer is considered anybody who hasn't purchased a home in 3 years. That is not specific to first-time home buyers. Okay, so you can't. Now, what does happen is that you can't have you have to have done something with your primary residence, like it has to be rented, etc. And you will have the occupancy guidelines that you have on any other loan there. But typically, you wouldn't want to use this program, right, unless you really didn't have any funds. And here's why. The interest rate is sometimes up to 2% higher for this program than you would normally get on just a regular loan. And in some cases, that's like, it's like $140 to almost $200 more in payment. Okay, now when you think about a purchase, and here's something you also want to write down, is it's approximately $5 to $6, depending on where rates are, for every $1,000 of buying power. Okay, so $200 a month is going to make a huge impact to somebody's buying ability. Not to mention, all of these programs are restricted debt to income ratio wise, right? So they're harder to qualify for, they lower the amount that somebody can purchase, and they will always pay more and have to keep that loan for 3 years. Okay, so here's the deal, if you have no cash, right, this is a really great solution.
Do they have a cap on how expensive a home can be?
Yes, they do. And so all of that information, guys, is, I think it's like, it's all listed online. I think it's right here too. It's $371,936.
Oh, that was for everything.
Yep.
That was for that column.
Yep.
Sorry.
No, it's okay. So you just want to know, and the minimum credit score for these programs is 640. Okay. Now, all of this stuff though, and here's why you don't want to get into the nitty gritty. This class is literally what's possible. Okay. I find often that when we know too much, we actually disqualify more. Right? So if somebody is interested in buying, I say have them talk to a lender. Like a lot of times people will say, I have disastrous credit, and their credit's a 680. And I have people who literally filed bankruptcy yesterday and they're like, let's qualify for a home loan. Okay? So just know that people, the way that they dictate their finances to you are going to be a reflection of how they feel about them, not necessarily reality. Okay? Or the way I would feel about them. Right? Okay, so does that make sense? I just want you to understand what's available for zero down. Cool.
Can I ask one more?
Yeah, absolutely.
What's the debt to income ratio on this?
It's different per program, and it's up to 49%, but typically it's under 45.
Okay, that's
Well, can we, and I don't want
You're fine.
to sidetrack your program here, can we talk about front end debt to income ratio guidelines, back end? what the two mean, and then because I'm not sure if I understand how
Yes,
the front end works.
I will. So here's the thing,
Fine.
but let's segue,
Sure.
okay? Because that I don't want you guys to get confused with that explanation and down payment assistance programs. Okay, I want you to understand what down payment assistance programs are, and then now I'm going to explain what he just asked. Is that fair? Okay, so we're going to put this one here so that you know we're not talking about down payment assistance anymore. Okay, because it's impossible for me to teach you all about loans in 1 hour setting. Okay, I've done this for literally 16 years, and I've done thousands of home loans. Okay, so a housing ratio, if you want to write this down, is the percentage of the new house payment to your gross income. Okay, so it's just the housing payment, and typically most lenders will want to see that under 31%, so between 28% and a max of 33%. Okay, if you were doing manual guidelines. Okay, now your debt to income ratio includes the new house payment plus anything that reports to credit. So credit cards, student loans, collections, mortgage payments, auto payments, everything that would report on credit. So not your utilities, not your car insurance, not, things that don't, your gym membership, right? Your cell phone bills, so not that, okay? So it's all of that, and then again, based on your gross income, okay? Now, manual guidelines, depending on what type of loan you go with, are 40, so it's 36% to 43%. Now, you can get away with getting up to 50% on a manual guideline, right, with compensating factors. Okay, a compensating factor is additional income we can't use, like, the spouse's income, or a secondary job, or commission that doesn't qualify yet. It's 6 to 12 months worth of savings in the bank, right? There's reasons for that, again, right? Within reason, right? Now, that's all manual. What we can do on an automated system, so most of your loan officers will enter in all of this information to a computer system, and it'll shoot back whether or not the computer's algorithm says this is an approved eligible. Now those ratios can change, right? I can go up to 57%, sometimes 62%, right? So it varies, right, quite a bit, right? So those things are only important in really a manual situation where you cannot get an approved eligible or an accept findings online. Does that make sense? That was a lot. For real, if it doesn't make sense, do not.
Well, so I've had this scenario. Client has 0 payments, no car payment. Okay, so we've got a front end ratio of 36%, and we got a back end ratio that's
30%.
Well, not exactly.
If they have no debt, it should be the same.
What I'm saying is, they would be approved on the back end. So
the debt to income ratio. So back end is typically debt to income ratio, right?
Yeah.
And front end is your housing payment. Yes.
Yeah. So they're wanting to buy more house than their front end ratio. For example, with their mortgage payment's going to be $3,000, but they have no other debt, so they meet the back end, but they don't meet the front end. Is that been, like, do you see that? Is it?
I do. I see it all the time.
Yeah.
So you always default to whatever your front end ratio is as a loan officer if you cannot get an approved eligible findings online. Typically, this client, if they want to get qualified with housing and a debt to income ratio that's the same, would have to have more assets in the bank. So the algorithm favors loans with larger down payments and more assets in the bank. Okay. So if that person had 20% down, I don't think that would be an issue.
So qualified assets?
So assets are liquid assets that you can borrow from. So it's a 401k that allows you to withdraw or borrow from. If you have an Arizona state retirement, like a 403b plan, and you cannot borrow from it, even though you have like $500,000 in that, I cannot use that. Restricted stocks, same jam. I can't use those things. I can use things like 401k, stock accounts, checking, savings. You can sell things like your automobiles, jewelry, things that I can attach an appraisal to.
IRAs?
IRAs, perfect, yep. Okay, so it has to be liquid.
So when you said attach an appraisal to, so if somebody was asset rich and older, and you could attach appraisals to potentially selling items, you count that?
Well, it depends on what items, right? So let's say, so I've had people sell a coin collection, I've had people sell a stamp collection, right? These are all things that can be appraised,
Okay,
right?
but
And
they
then
have
you
to
can find
sell
the
it
value
to
online.
qualify for the loan.
They have to sell, well, they have to sell them to have the assets to purchase, yes.
Okay.
You can't, I believe that this is actually gonna be something that comes back, to be honest, but it is not back yet, but we can no longer collateralize things, right? Like, you used to be able to do that in the past, that has gone away. I do think that as they loosen things up, I actually think that might be something that comes back, okay? Does that answer that question? Did it answer your question?
Yes, it did.
Okay.
So what's collateralizing mean?
This is not allowed now. I just want to be very honest. So it's like if you said, I had a $10,000 piece of jewelry, right, with an appraisal, you could maybe use that as assets. Okay.
And you, with collateral would mean you don't have to sell it, it's just collateral that they could confiscate if you don't pay.
There you go. Absolutely.
But you can't use that now.
You cannot use it now.
Sorry, last question.
No, it's okay.
Are you able to use permanent or cash value life insurance policies?
It depends on whether or not you can withdraw, right? And if you're withdrawing. So like the cash value, it's like typically that's in an income situation where we can use that because you have like the annuity draw. I believe you would still have to withdraw it, right? I actually have to check on that. They might allow you to use 60% of that, but I don't know that off the top of my head. So if you get with Sammy at the end of the class, I will get you that answer. Okay, cool. Are we good with all that? Okay, cool. So now let's go to loans to fit your life. Okay, so this is what's typically available for you. Okay, and I'm going to talk about some additional things, right, where it comes to niche later. But your typical first-time home buyer loans, so the loans that people typically use as a first-time home buyer are going to be your bond programs and are going to be your FHA loans, going to be your minimum down conventional loans, okay? Now, if you've bought a home in the past and you didn't use FHA and you don't have a current FHA loan outstanding, you can use FHA anytime you want to buy, okay? If you're buying as an owner occupant. Does that make sense? Mm-hmm. Okay, so next to FHA, what I want you to do is write owner occupant. Now, you cannot use an FHA loan on a second home. You can't use it on an investment property, period. The minimum FICO score on this is going to be our lowest along with VA, and that's 580. Okay, now you can also star this FHA loan, and you can qualify with alternative trade lines if you are not a credit user, meaning you do not have a credit score, but you don't have a gazillion of collections, which is why you don't have a credit score. Does that make sense? Right, so if you're not a credit user, you can use FHA financing if we can verify alternative trade lines like 12-month worth of rental history, and utility payments, your gym memberships, you know, contributions to a savings account. I mean, we can get creative here on the alternative trade lines, but what's important for you to note is that if you meet somebody and they're like, I don't, you know what, I just don't use any credit. I'm a Dave Ramsey follower, I don't touch the thing, you know, right? They still have options for their home loan, okay? That's super important. That's something that people disqualify people on all day long, even other lenders, truthfully.
Is there a maximum that they can borrow on an FHA?
Yes, there is. And it's like a little over 314. So
Is it similar to the VA?
no, the VA is with conventional financing, and that is 484, 350.
Someone told me that VA might go up next year to like substantial higher amount in 2020.
Depends on the area.
So every year they evaluate the average sales prices, and typically VA loans are attached to what happens to conventional financing. So they did raise significantly this year. They were at 417,000 and they rose to 484,000. That's a significant move. Right? They were 417 to 424, then to 484. Okay, I mean it's a significant change.
Do you foresee FHA being raised in the coming year?
As home values continue to rise here, yes. Right now, with that being said, FHA didn't increase for many years. It's like they do it based on the average sales price. So we've had a really good aggressive market. So it bodes well for if that happens, but it's not a guarantee. Okay.
Do they evaluate that yearly and then make a decision, or
Yearly.
is it yearly they look at it and go, we're going to do it or not do it?
Absolutely, it's in December, and typically I will always send out a notice. In fact, the current loan limits right now, if you follow me on social media, on my Instagram highlights, it says market updates, right? You can go and see all of those changes, right? And I have them there all year round. Great. Does that all?
What's FHA, 417?
No, FHA is, hey Sammy, will you go to that and then tell it? It's like, right, it's just above 314. Okay. Now, one thing to note about FHA loans, they say that condos are available for them. Lots of real estate agents mark FHA financing for some reason. Very few condos are approved FHA. Okay, so you just want to pay attention. If you put into a Google search FHA approved condos, you will get to the FHA site. You type in your condo program. You have to scroll all the way to the right. For whatever reason, your condo will still look approved if it was ever approved. Okay, and you won't see that the expiration was last month or in a week, right? And it's really important to pay attention to that. Here's the positive news. If it was ever on the FHA approved list, we can get it renewed. It is just difficult to get new approvals. Okay, so I'm hoping that will change. Okay, it never used to be difficult, and with the downfall, it became super impossible. So just know that if you see it on there, it's important. Now, with that being said, there's a difference between a condo and a townhome or like a patio home, okay? And the difference is all in the legal description, right, of the home. So the legal description, if it says horizontal regime or declaration of condominium, right, it's 100% a condo. I don't care how many times it says townhome.
Hey Lizzie, real quick, it's 484 and 350.
That's conventional. Hit it one more time for FHA. So 484, 350 is conventional if you want to write that down next to it.
Hold on.
Do you want to bring it?
One. Yeah.
Okay, cool. All right, so just what you want to pay attention to that. What I love about FHA loans is that they're very flexible. Okay, so FHA loans right now, 314,827. Same. It's just some random number. It's really hard for me to remember those last three. 314,827. Okay. Now, what's cool about FHA financing is that it's very flexible. They allow for compensating factors, and if you have somebody that doesn't have the best credit, and we can explain it away, we can typically get them qualified. Okay. So they are most flexible in terms of debt to income ratio, in terms of credit that you will have. Okay. Now, the other thing I love is that the loan limits increase if you buy a duplex, a triplex, or a fourplex. Fourplex is your limit, okay? But you can get up to a $600,000 loan on an FHA loan if you're buying multifamily, okay? So really important to know, right, this just for what's available to you, okay?
So if somebody's buying a fourplex, for example, are they going to give 75% of the rents towards the debt to income ratio, and do those have to be documented, or do those?
So it's through a rental schedule, right,
Yeah.
and the current leases. So the calculation is different, right, every single time you do a multifamily unit. What he's talking about is how we calculate anticipated rents for investment properties. It's different when you do multifamily, okay? But just so that you know, you can use proposed rents to help you qualify. Okay, that's what you should know. Okay, You don't need to know like what calculation we're doing. You only need to know that proposed rents can be used to help you. Okay?
Well, that's confusing to me because it says owner occupant.
Because you have to occupy one of the
At
units.
least one of the units? Okay.
There you go. That's a wonderful question. Seriously. Right?
It's amazing how many people we've helped buy multifamily homes and then move into them. They're like, I'm going to rent it out and it pays my mortgage. And
You guys, this is going to be a thing. I like, especially for millennials. The average millennial income, guys, is under $38,000. So figuring out ways to house hack, buying multifamily residences, buying houses with casitas, renting out their rooms. This is going to be something that you see. Okay, which is what we're going to talk about when we go into how you sell it. Okay, so just to speed up here, guys, USDA is 0% down, only qualifies certain areas. You can Google search USDA approved areas. You have to type the actual address into their search parameters. There is no map that you can read. Okay, so just so you guys know, you have to be a first-time home buyer. You cannot have owned a property to use USDA financing. Okay, super debt to income ratio restrictive and FICO restrictive. This hasn't even really been a thing, but you should know about it just because it's available in case people ask you. Okay?
So, before you move on, what's the difference between USDA Direct and USDA?
It's whether or not your lender can service that loan and fund it versus they have to go through.
So what's the other
USDA
term?
funding.
Direct is?
Direct meaning that
They went to
you
the
go
US
directly to USDA, USDA funds it.
And the other one's called
Guaranteed.
certified, right? Oh, guaranteed, there we
Guaranteed,
go.
yeah. Meaning we underwrote it, we fund it, we get paid from USDA.
But I had a client in the USDA Direct, they could get more than they could from the
Because we have more
guaranteed.
restrictive guidelines
Okay.
because we're guaranteeing it and hoping they buy it from us.
Okay,
If they approve it and do all that stuff, right, then we
Okay.
have less liability.
right.
Okay? Okay. All right. Now, conventional loans, okay? Your minimum down is 3% if you are a first-time home buyer only. Okay? Now, if you are married to a first-time home buyer and two borrowers are going on the loan and you are not, but your spouse is, you can still qualify for a 3% down loan. Okay? So only one person that's borrowing the funds has to be a first-time home buyer. There are no gifts allowed on that program.
Oh, okay.
Okay? You have to have 3% of your own funds. Okay? But it is an awesome program, especially if you have really great credit. Okay? Because the mortgage insurance is lower. I mean, it's a really, and you can go up higher. I mean, it provides so much more flexibility, and it's an awesome alternative to FHA financing. Okay? Now, if you had been a previous owner, it's 5% down minimum. You can get a gift for that. Okay? Again, if you have great credit, this is an awesome option. Here's what I will tell you about the difference between FHA and conventional financing. If your credit is 680 and below, and honestly under 700, typically your mortgage insurance and your interest rate is going to be cheaper on an FHA loan at this moment in time. Okay? Now, tomorrow maybe that's different, but this moment today, that's what that will look like. Now, on a conventional loan, it may be higher. The difference is loan amount and whether or not the mortgage insurance will come off the property. FHA mortgage insurance stays on the property the life of the loan, okay? Now, we're gonna go into how to sell that in a second, okay? Conventional loans, you can remove it after 11.9 years, okay? So practically
The mortgage insurance.
So,
Yeah.
can't you remove it if the value, you should be able to remove it if the value is over 50%?
Yes and no. Your equity position has to be 25%, and you have to have paid on it for 2 years minimum.
Okay,
So, but with the way that houses are appreciating right now, it's not 2 years. You know, so I would not quote that. Just so you know, like it's good for you to know if you have a client right now, but that would not be something I sell because they can change those rules.
So you said 11 years? That's like the
Minimum
rule.
payment. If you made minimum payments, no, that's typical. On average, it comes off after.
Oh,
11 years.
because
if you made
of-
minimum.
You're just doing mathematical
no
probability.
appreciation.
All right, so no
I'm just doing
appreciation.
minimum payments.
Mathematical probability. Okay.
These
sorry.
people know too much.
Sorry.
I just want you to know these, because here's the deal. You could get into the nitty gritty and like, let me tell you, you need to know enough to sell. Seriously, you want somebody like me who spends all of their time, because this stuff changes so much. Okay? All right. So, You can get up to 5 to 10 financed properties depending on your lender. We do up to 10. It changes your down payment, right? Just so that you know. Minimum down payments on investment properties to get your best financing is going to be 25%, but you can go as low as 15%. One last thing I'm going to add about this, right? For FHA loans, your maximum seller contribution is 6%, if you want to write that down.
For the FHA?
For FHA. Conventional, you can do 3% typically. It actually increases when you put your down payment down, but only 2% on investment loans.
So, wait a minute. Maximum 6% from the seller contribution on an
For
FHA?
FHA.
6% for everything? Just 6%, that's the maximum they
Maximum
can
amount.
contribute. And then you said there's a maximum on conventional?
Yep, it's typically 3%. Okay, you will see that.
Interesting, thank you.
Yes, on investment loans, it's 2. Okay, I just want you to, this is like where I see most people get burned. Okay, VA loans, guys, you have to be a qualified veteran. No spouses or children can qualify without the veteran. Some widows, right, can qualify without the veteran. And it's some, not guaranteed. Okay? So just know you have to be the veteran, you have to occupy the property.
What is that, for 2 years?
You have to occupy, you sign a deed of trust, guys, everything's occupancy for 1 year. It's 2 years for capital gains.
Can you have more than one VA property loan out at the same time?
You can.
Yes.
Okay. So if you do, then can you rent out that other property? What happens to that other
You can.
Okay.
You can rent. You only have so much eligibility with your entitlement. So like you have your basic entitlement, then you have your bonus entitlement, and then once you cap that out, right, you're done. You only have one restoration, right? Otherwise, you continuously pay your VA funding fee, right? And you can only do that one scenario, like where you have 2 VA loans out once. So it's kind of, there's lots of rules. Short answer, yes. You have to talk to a loan person because it's not the second time, right? And you can do a VA jumbo loan. So yes, you can have 2 at the same time, right? You have to speak to a loan officer. Yes, you can do a VA jumbo, right? And you do not pay the difference between the 484, 350. It's a calculation. Just know it's usually less than 10%. Okay, and the max limit is 484, 350. Okay.
If you had a vet that either shorted or lost a house during that wonderful time, can he still qualify, or she?
Yes, but again, it's a percentage of their entitlement that's still left over.
Okay,
Right,
so
and
it's
so
a percentage
there's-
of that, but they can still qualify,
They can.
potentially.
But they can, but they may need a down payment or their 100% eligibility is restricted.
Okay, thank you.
So it says you have doctors and vets.
Yep, I'm just about to get there. Okay, now, the maximum seller contribution on the VA loan is 4%. Okay, so you want to write that down. Okay, now niche products. Okay, niche products are portfolio loans. Okay, you can get a portfolio loan at almost every single bank. Most mortgage companies have them. We have one called 321, right, where we the down payment is 3%. You give back $1,500, and then they get a $2,000 gift card from Home Depot. Okay, so there are going to be specialized programs for every company. Okay, we have ones for down payment assistance. That's our 321. We have jumbo loans all the way up to $3 million. Okay, we have 5% down jumbo structures, right? So it's a first and second combo. Okay, and then we have a lock and shop program, right, for new builds. Okay, so those are all portfolio type programs. Doctor and professional loan programs also qualify under this. You will find that Compass Bank, Bank of America, most banks are now following suit with the professional loan program, and they have other ones for construction, perm. I mean, if you need something, guys, and it's weird, call me. I typically know who can finance it for you, okay? That's what you need to know.
So first and seconds have come back?
Yes,
You
they
can do
have.
first and seconds?
Mm-hmm. A first and second means you have a first, and then you have a second, and you're maxed out at a certain loan amount. There is no 100% financing. The maximum is 95%. Okay?
With jumbo over, what, 484, 850? What is the minimum down payment on that?
So depending on your credit score and debt to income ratio, you can, if you met all of the perfect parameters, 5%.
And on jumbo loans, what is the difference other than it's going to be a big loan? What's that specifically?
So the
difference
criteria,
between a
you guys,
conventional-
is so much more conservative, right? You have to dot every I, cross every T, explain everything, give me a blood sample, a promise of your kid's first life. I mean, everything.
It's pretty much like that on every loan. Like, come on.
It actually isn't. The conventional loans are actually getting so much more like flexible. I mean, we have day one certainty now where we can document your income online and we don't even have to ask you for financials. That's your rocket type mortgage. Jumbo loans have not followed suit. I mean, it's like 3 years tax returns. I have to document everything. It's embarrassing sometimes the amount of things you have to ask. I will tell you that I'm just being very honest. If your clients have more than $100,000 at their bank, sometimes it's easier to go forward with them, right? If like a Morgan Stanley or a bank, if they're a preferred client, sometimes if they can get that, it might be easier for them. If they have any hair on them, those people deny them in a heartbeat though, just so you know. So like where I specialize is on those hard jumbo loans.
What's the advantage of it? What's the advantage over conventional loan? What's the
Higher loan amount.
they'll just loan more
Like
than
3 up to 3 million
Because
versus
on conventional, you can
484
only
and
get 484.
350. Yeah. So
But if
here's
you're
the,
at like a $500,000 loan, is there any particular advantage? I understand when it's $1 million.
how would you just put additional down? No, I would say that you're way better off doing a conventional loan, at least for life happiness.
Okay.
No PMI.
Right, so just so you guys kind of keep that in mind, okay? All right, so this is just to let you know what's available, okay? Do not try to become a loan officer. This is just a lot of stuff, guys. You can really get into it here, okay? So that's your basics, right? So this is just showing you a couple things that we do differently in terms of locking and shopping. This is for your new build buyers. Most new build lending has their own banks, right? This probably won't apply, but if you have people who are nervous about the market right now, especially since rates are so low, this might be a really good alternative for them, okay? So I'm not gonna go too much into that. This, guys, I don't know how many of you really finance condos. Condos are a really big deal. This is a checklist to let you know when you have a problem, okay? Condos is its own class, so I'm just going to tell you what this is. You guys can review this later, because I really want to go into the market and then how you sell mortgages, okay? And then this is just like the basics to know about jumbo loans. We just reviewed this, okay? So I just kind of flew through the rest of that, primarily because we only got 20 more minutes left, okay?
Yeah.
So now on to market, okay? So you need to know minimum down, minimum FICO score, minimum contributions, okay? What we ask for just in general, guys, for loan stuff, we always need 30 most recent days of whatever financial information, bank statements, paycheck stubs, W-2s, everything, okay? So the most recent information, you should educate your clients that they are going to provide the documentation multiple times, okay? Now, market. Here's where I find my market news. I read Bloomberg every single day, right? So I read Bloomberg every day. I read Mortgage News Daily. I read the Freddie Mac interest rate survey, okay? And these are the things that impact rates, okay? These are the super important. How many of you guys think that the Fed controls mortgage rates? Like, honestly. This is a common thing. Most people think that when the Fed says they're raising or bringing down rates, that it has a direct impact on mortgage rates. Most consumers feel this way. Let me explain to you that the Fed rate is the rate that banks borrow money from the government. Does that make sense? So logically, you would think that if they kept them down, right, that banks would then just offer lower interest. Okay, that's like the logic, okay? Now, what it does impact are like lines of credit, personal loans, right? Those things are attached to the Fed rate, right? Because they're typically attached to the indexes, like the LIBOR, et cetera, okay? Now, the reason it doesn't impact mortgage rates is because mortgages are associated with bonds. And when the Fed makes an announcement like they're gonna lower the rate that banks can borrow money from, The stock market loves this because they think that businesses are now going to have more access to funds. There's going to be more liquidity, which means that they should be able to hire more and produce more products for sale. Okay, so it actually has the opposite short-term effect on interest rates, right? Because people get excited about this, they take their money out of bonds, which impact interest rates, and put it into the stock market. Okay? Now, whenever you hear that the rates are going up, right, people panic, right? Oh my God, it's not going to be as good. And typically we will see like a short-term correction. Now, it depends on what big topics they're talking about, right? Because if inflation is how much our money is depreciating, is a big impact, right? And we're not bringing up interest rates, people panic too. Okay? So you just have to pay attention to what happens. But typically if you hear that the stock market is rallying and they're having the best days ever, interest rates are going up. Okay? Now, what's exciting about that, especially if you're in the process of refinancing or buying a home, is that like if there's a natural disaster or if there's this crazy tariff situation with China, I know that that will have a direct impact on what happens for interest rates, right? So a week and a half ago, they came to a resolution. This should be a news topic that you set a Google alert to right now, just so you guys know. We saw interest rates increase, and then there was a good jobs report, and then there was a good retail sales report. So we've seen rates be the highest that they've ever, well, the highest they've been in the last 3 weeks. Okay, so the highest they've been in 2018, right? But yesterday, because I set a Google alert on this tariff situation, so global economic news, natural disasters, you know, crazy presidents, they have a direct impact on what happens. So I saw my Google alerts go up yesterday, and it said, Trump announces a new war on China with tariffs, you know, and I was like, boom, interest rates are going to get better tomorrow, right? I woke up, I'm not even kidding, I woke up at 6:30 this morning and started looking at like where the bond market was. It was up at like 5 points, then it was up at 9. Right before I got into this class, it was 13 points, which is, I mean, once you start seeing that, typically we're going to have like at least a quarter improvement, maybe a 0.5% improvement. Like this stuff is exciting, okay? Like, and if you know about it, right, if you're able to go, gosh, guys, you know, the economic reports are showing like really good job reports, the stock market's really rallying. I mean, honestly, I don't see interest rates declining anytime soon, right? Because you have borrowers who are like, I don't know, I think the market's going to crash, or I don't know, I think the market's going to get soft, right? Like, do you hear this?
Yeah.
Because I hear this, right? And if you knew how it worked, you could go, honestly, I don't know. I mean, we've seen interest rates steadily increase all year long, right? You know, the job market is good, the economy's good, your stock market's probably doing good. I mean, have you checked your 401k? Typically, that means interest rates are going to go up. Okay, here's the magic. Okay, 1% interest rate typically takes away $100 worth of buying power. 1% interest rate increase. Okay, it's typically about $100 to $140 worth of movement. Okay, that's a lot of buying power. We're talking about like $30,000. Okay, so this is why it's magic to know about the market. Okay, now, how many of you need content to put out to your databases, to post online? This is great content, okay? And when people start seeing you as a market expert, they're like, that person knows. Like, I'm gonna go to that person, okay? So again, I'm gonna repeat where I find my stuff. Okay, so I read Bloomberg, okay, and Bloomberg just tells me what's going on, like what things, and I'm looking for global economic news, right? So what's going on overseas, okay? I'm also looking at like, you know, like are there any potential dangers? Like the Iran situation is something I look at. The threats with North Korea, again, something I look at. Are there any natural disasters? Okay, I know this makes me sound like an awful human, but this literally impacts my job, so I do pay attention to them, and I know how they positively impact my job. So those are the things that I pay attention to. I also will try to take people away from places like bankrate.com. So bankrate.com, guys, and your clients go there all of the time, is just a place for advertisements. Okay? Now, here's something you guys need to know right now, okay? Because your current lenders are feeling this, I'm feeling this. Most banks, and you can do this, this is a homework assignment for you guys to get educated. Most banks are quoting rates with 1 to 2% discount points. So like if you go to the Quicken website, right, every rate that they're quoting is at 20 to 25% down and 1.875% discount points.
Wow.
Okay, now your client's going, but my rate is 3.75. And most lenders will think, well, I wouldn't pay 1.875 to get a rate, right? But your clients don't get that. They care about their monthly payment, they care about the interest rate because that's all that people talk about. Okay, it's, you guys need to know what it costs them, right? Don't you think that's a value add for you?
Yes.
Right? Well, let's look, because if you look at like the Freddie Mac interest rate survey, it'll say where the average rates are, right, in the marketplace and what that discount point should be. So if you're looking at that and it says 4% and the rate that your client just got was 3.625, that should make you pause. Hey, have you looked over your loan estimate? Right? And most lenders, they don't know what to do, right? They just give a loan out based on what you called in for, and then they just present you with what they would do, right? Like they know they wouldn't pay the discount point, so they're not even presenting it. And so then they get shopped, right, by somebody else, and then they've lost the deal, and your client paid 1.875%. Okay, that's nuts, but that is literally what's happening. Okay, but Quicken Loans is doing it, Bank of America, Chase, Wells Fargo, all of them. And if you go online to the rates that they're offering, you will see that. Now, places like Navy Federal, let me explain to you, those are non-profit organizations. Their rates are always going to be the cheapest, period, the end. They're also 9 weeks in underwriting right now.
And they never close on time.
But that's why you have a non-profit organization doing your home loan. Right? So you just have to know why rates are so low. The other thing is that most internet banks pay minimum wage, right? They pay just for the application, right? And so they're not paying for mortgage experts to review your file. They're just taking an application. So you may be great. You may be the 800 FICO score person with the 36% debt to income ratio, and you will have no problem getting your home loan done. Or you're the 800 person credit score guy who owns his own business, who had a slight decline in income, and the underwriter's going to freak out and decline your loan, which is how I got my crazy jumbo loan like 3 weeks ago, right? You can't just have, right, like there's a difference, right, between a quality mortgage person and the cheapest interest rate. And in a purchase situation, guys, it matters. Especially because right now, what kind of market is it?
Sellers.
Seller's market. So is a 9-week close of escrow going to cut it?
Nope.
Okay. Is not having a pre-qualification form going to cut it?
No.
Right? I mean, those approval letters that they send out. I mean, so I just want you to know, right? I mean, you just have to know what the difference is and be able to educate why. Because they're going to go, well, why do you want me to get a higher interest rate? Right? And for you to know that, hey, yes, they may be licensed, but they've only done mortgages for 6 months. Like, is that important for you to know? Hey, that they're paying 2% discount to get you the cheapest rate. Is that important for you to know? Okay. So did I answer questions on where I find the stuff? So it's Bloomberg, Freddie Mac interest rate survey, Mortgage News Daily. I also, guys, send out a Monday email with where current interest rates are and then just what I believe is going to happen for the week based on what I read. And I write it in my own personal words. So this is not just some like thing I copied and pasted or some subscription I'm blasting to you. This is like my personal interpretation of what's happening.
How do we get on your list?
You sign up with Sammy. Sammy, raise your hand. Okay, cool. All right, so how to sell it, okay? So here's the thing about sales. Most people are either moving towards something or they're moving away from something, okay? So you mentioned buying a home and they're like, oh my God, I can't wait to do it, okay? Your next thing is, oh my gosh, let me tell you about the next steps. Let me get you talking to a lender, right? That's an easy sell all day long, okay? Your big thing is just to get them to the next step, okay? Not to overgive information to somebody who's super excited and ready to go. Sometimes what happens is that we get overly excited and then we tell them every single step that's available and all the value you're going to provide and all these crazy things, and they're like, whoa, that's a lot of steps. Okay, so the big thing is when somebody's moving towards something is tell them how possible it is, how excited you are. Don't disqualify them when they say things like, I've had a bankruptcy in the past, or I don't have funds saved. You're excited because you know there's down payment assistance. Don't worry, FICO scores go as low as 580. Honestly, these people can help you with a credit plan. We do credit plans, okay? Right, you just need to know be encouraging, next steps, what's available. Does that make sense to somebody who's moving towards something? Now, people who are moving away from something, they will instantaneously say things like, I don't know if I can, or I know I can't, or no, I tried that last year, okay? Here's how you sell them. Number one, you have to listen to the whole thing no matter how many solutions you have, okay? Like you might have the best solution for what they've just said, but how many of you guys like to get advice when you're complaining?
Nobody.
I'm just checking, right? Okay, so nobody likes to get advice when they're bitching, you know what I mean? So you have to listen to people go all the way around. And then you say, are you open to feedback? Okay, this is like the best line. Are you open to feedback?
Oh,
Okay,
you saved my life.
good, I provided one nugget today. So you say, are you open to feedback? And then you start providing your solutions. Hey, loans go now to 580 and I work with a really great person who will walk you through the entire credit plan. If it isn't now and it's next year, no worries. I plan on being a real estate agent for the next 30 years. Okay, I got you. And it's not today. Okay, right? This is how you talk to somebody who's moving away from something. Big mistakes that people make, they say, oh, I can't because my credit score. Oh, no, there's fine. They just interject without going, well, where did you hear that? Did you talk to a loan officer? Right? Where did you get qualified recently? Right? Did somebody turn you down, or where did you hear that? Right? And then let them tell you the story. You listen to it, and then are you open to feedback? Okay? Now, people who are waiting for the market to improve. Okay? Here's the thing, none of us have a crystal ball, okay? But what you can say is that now is a time, literally, right now, this second, the interest rates, we have no business having interest rates as low as they are right now, period, the end. Our economy is super strong, the stock market is super strong. There is no reason for interest rates to be as low as they are right now, okay? They're as low as they are right now because we have a president right now that has some, personal drama. Okay, I don't want to get into that because I'm not trying to be political here, but there's some personal drama there, and he's trying to deflect every which way he can. He's actually become a Google alert for me because it's just crazy. He has had more impact on the market than any other president in my entire career. I've never experienced this. Okay, so this is why they're artificially low right now. Okay, so when interest rates increased last year, guys, just so you know, they rose from 4 1/4 all the way to 5.5% interest last November. That was our peak. Okay, that cost people $140 a month. Okay, which is a lot. And when you think about appreciation of your property, when you think of your buying power, they're losing at least $30,000. Okay, so does that matter? Yes or no?
Yes.
And that's market data as of today. Okay, will it change a couple months from now? Absolutely. And I will keep educating you if you follow me and you subscribe to my stuff and you use me as a loan officer. You will know about how to sell these things, how to educate your clients, what things that we're changing, because this stuff always evolves. There's new loan programs, there's new market changes, all kinds of things, right? Like when interest rates went to 5.5%, 2-1 buy downs came back. Okay, where you could buy your rate 2% down for 1 year and then it goes up to a graduated rate the next year and then it goes up for the life of the loan, right? Those kinds of things happen, right? And I will keep you updated, okay? You just need to know that there's lots of opportunity for people to qualify, right? There's lots of plans and you now know where to sound educated on the market and then how to sell them if they're moving towards something or moving away from something.
So what's the interest rate now?
So, well,
Depends on a lot of factors, right?
Well, right now this second, because I didn't get to check right before this class, I was looking at where the market was, but it started off as 4% this week was like the lowest rate that you could get.
Right.
Okay? Like 2 weeks ago, 3.625 was the lowest rate you could buy down to. Okay? Today, I'm seeing some market improvement. I mean, I'm pretty excited about this news, you know, because I had some loans I needed to lock, right? So this is pretty exciting. So right now, I'd probably say that give it a day or two. If this stuff still trends, it'll probably be 3.875, right, as the lowest rate you can get, right? It's important for you guys to know this, right? But again, Mortgage News Daily will give you like a snapshot of what's available online.
I have a buyer that's going to put cash down, but she wants to put a mortgage on it afterwards. Because she has more leverage with the cash. What kind of loan is that called?
A delayed financing loan. So you have 6 months if you buy cash, right, where you can qualify with the same like purchase rates and the same loan to values, right? So it's called delayed financing.
And about what is the interest rate?
The same as you would get. It's like between, it depends on the credit score and the debt to income ratio, but the lowest rate, 4%.
Okay.
Should we tell our clients to lock in if interest rates have gone down?
I mean, it would say, hey, have you talked to your loan officer? I think now would be maybe a good time to check in locking.
So I should tell her to call you.
I would.
You're here, you know about it.
She's like, I would. You tell her.
That's why she's here in your Yessa's class.
Yes.
Guys, you
So
can tell
question,
I'm
I'm so-
super passionate about home loans, yes or no?
Yeah.
Okay.
Refinancing versus new purchase interest rate, why is it such a difference?
Because it's more risk to the lender,
Okay.
right? Whenever you're taking out money or redoing your home loan, the likelihood of you foreclosing goes up. That's just it. Like if you take cash
There's
out,
obviously issues or you wouldn't be refinancing.
it's just liquidity issues. The same thing with like credit. This is something you should know because clients freak out over credit inquiries. I just want to teach you this really quick about credit. So credit inquiries will stay on your credit for a maximum of 2 years. The only time that it has real impact is when you've had 8 credit pulls. 8 credit pulls is an indicator that you're going to file for bankruptcy. Okay? That's what it is. Now, if you've had 3 to 5 pulls for the same type of thing and then you get out the loan, you're fine. But normally when people are applying for all kinds of different things, it's typically because there's a liquidity issue and they normally see that a bankruptcy will happen. So that's why a dip in credit. Now typically it's not really that high. It's like the lowest factor on like the equation, the algorithm for credit, literally inquiries, lowest. But if you had marginal credit like a 580, 5 points disqualifies you from your home loan. If you were at a 739 or 740 and you went to a 739, that changes your interest rate because your credit scores 740 and above, best rates. Okay, 720, second best rate, 80 to 700, right? Average credit, right? It used to be like 660 was average credit, but 700 is average credit. Okay, now 640 is our bare minimum, right? That used to be 620. Do you remember that? Right? So I just want you guys to know that it's tiered, right? So it's hard for me to answer your interest rate questions without knowing like their loan to value, their debt to income ratio, their credit, what type of loan we're doing, okay? But it's good to know you can buy cash and pull out your money, yes or no?
Yes.
Delayed financing, cool.
Do they apply to you before the purchase?
Typically, yes, you want them to.
Okay.
So, typically you guys meet them, show them the possibilities, set up your buyer appointment, and then before you show them properties, get them pre-qualified. Okay?
So to reiterate, because I have a couple of clients that want to shop for home loans, but they're worried about inquiries on their credit. It's different than like inquiries from like a revolving loan, like a open-ended like credit card than it is home loan.
Absolutely.
And you're saying if it's less than 8 even on a home loan,
3 to 5 within 45
3
days
to 5,
counts as
okay.
one.
And then it's going to go off when the inquiries.
Between the first one and the last one.
Oh, okay.
45 days, 3 to 5 is typically one inquiry.
Okay, thank you.
How do you talk the client out the potential Rocket Mortgage ledge?
I do Rocket Mortgage and I love it. So here's the deal, right? When I'm talking to people about whether or not they go with an internet bank or they go with Quicken Online, I always ask this one question. It's like, how do you know that's the right loan? right? And most of the time people are like, I don't know, I
They're
never
different
thought
ones.
about that.
Yeah.
They're different
They're
ones,
different
what do you
ones,
mean?
yeah.
And a lot of times when people are shopping me, that's the first thing. I'm like, well, what loan options have you been reviewed? I review at least 4 loan options with every single client, and sometimes, guys, it's like up to 8. Okay, depending on what we're doing, because there's so many different ways to structure a loan, buy out mortgage insurance, buy down your interest rate, 20-year, 10-year, 15-year amortizations. I mean, there's so many things, and most of that will make more sense once you know how long they want to be in the property, you know, what their intentions are, can we do a rescore? I mean, there's so many things, and so if they're shopping a mortgage typically, and the last guy just talked to them about one mortgage program, typically I can outsell that any day. But that's just what it is. It's like, how do you know that that was the right loan for you? Okay. Now, can I ask you guys a question? Because we're at time. Did you find value in this class? At least one nugget?
Oh, yeah.
Okay, cool. Well, I'm not a motivational speaker. I am a hungry loan officer. And if you found value today, I hope that it's worth at least a referral for your next client. Okay? Thank you guys so much. I appreciate you.
Can I